Saving money is an important part of building a bright financial future. While the act of setting money aside is critical, the right savings account can make all the difference. Raisin, previously known as SaveBetter, has become one of the leaders in offering high-interest earning savings accounts and CD options. According to the FDIC, the national average of rates tied to savings accounts is 0.45%. If you stick your funds in a regular savings account with average rates, it will take a while to accumulate interest earnings. But you can choose to funnel your savings into a high-yield savings account. If you want help finding accounts with top APYs, that's where Raisin can help. Hey everyone, this is Andy Hill with The College Investor, investing and personal finance for millennials. If you're new to the channel and like what you hear, please hit subscribe so you're ready when our next video comes out. If you're considering Raisin, please scan the QR code below or use the link in our video description as that supports this channel. Thanks so much for considering it. All right, what is Raisin? Well, Raisin is an online platform that connects savers to top-notch interest rate opportunities on savings products. While Raisin isn't a bank itself, it partners with banks and credit unions to offer the products you'll see through the platform. Raisin negotiates higher interest rates for savings products directly through partner financial institutions. With that in mind, the rates you see on Raisin are typically higher than you'll find if you head directly to the partner bank's website. Typically, Raisin works with regional banks and other mid-sized financial institutions. The whole concept of Raisin is similar to brokered CDs, which has been offered through investment firms like Fidelity and Schwab for decades. Raisin was founded in 1973 and has been using a similar business model in Europe for decades. In 2023, SaveBetter, the US version of Raisin, fully rebranded to their parent company's name. So, what does Raisin offer? Well, Raisin represents a useful opportunity for savers. The company negotiates higher interest rates with partner banks, which means you'll often find above average rates. Raisin is able to make these negotiations work because banks tend to spend a lot of money on advertising. Instead of paying for traditional advertising, partner banks get their offer in front of a built-in audience through Raisin. It's a win-win for everyone, really. When you sign up for the account, you can view your funds through Raisin's online dashboard. However, the funds themselves will be stored in a custodial account at the financial institution, which means your funds are pooled with other Raisin customers. Here's a closer look at what the platform offers. High-yield savings accounts. High-yield savings accounts can come with very attractive interest rates, especially as of late. If you're looking to make the most of your savings, Raisin can help you find the top offers from their partners. A search for top high-yield savings accounts on Raisin showed several accounts with APYs of 5.1% or higher. When compared to the national average again of 0.4%, it's clear that you'll earn more money on your savings through one of the accounts they offer. Then you've got money market accounts as well. A money market account might be the right place to store your savings. If you want to move forward with a money market account, Raisin can help you find relatively high rates. Raisin was advertising several money market accounts with an APY of 5.05% or higher as well. In contrast to the national average of 0.59% APY, savers can earn more through Raisin's advertised rates than most money market platforms. Then they've got CD accounts. A certificate of deposit or a CD works by locking up your funds for a set period of time. In exchange, you'll lock in an interest rate for the duration of the CD. Most regular CDs charge an early withdrawal penalty if you need to take the funds out before the maturity date. However, no penalty CDs allow you to pull your funds at any time without a fee. Through Raisin, you can find traditional or no penalty CDs with relatively high interest rates. For example, you can find a 6-month CD with a 5.15% APY, which is significantly higher than a 1.19% APY that is the national average rate for a 6-month CD. So what are the downsides with Raisin? Well, the biggest downside to Raisin is that since it leverages a brokered model, you are limited in how you can deposit and withdraw your funds. Unlike a traditional savings account where you get a bank account number and a routing number, with Raisin you must do everything everything through their platform. Your funds are safe and FDIC or NCUA insured at the partner bank, but since it's in a custodian account, you can't do things like direct deposit or wire transfers. You must log into the Raisin portal and set up all your transfers to your linked bank account. That's it. Depending on how you want to use your savings account, this could be a deal breaker. Let's talk about fees. Are there any fees, you might be asking? Well, Raisin pulls together options from several different partner banks. In general, the platform promises that you won't encounter any fees. Plus, the minimum deposit is set as low as $1 per month. However, you should always double check the product terms before signing up to uncover any specific fees. For example, traditional CD products indicate the size of the early withdrawal penalty within the product term sheet. Is Raisin safe and secure, you might be asking? Well, yes, Raisin partners with FDIC and NCUA insured financial institutions. As a saver, you can breathe easy knowing that your funds are protected up to $250,000. Additionally, the Raisin platform is SOC2 certified. In other words, the platform has extensive security measures in place to protect your information. So, in the end, is Raisin worth it? Well, if you're looking for a high APY on a savings product, Raisin presents a worthwhile opportunity to consider. Not only does Raisin make it easy to find relatively high APYs, the platform makes it easy to lock in the opportunity. However, you might not want to work through this platform. If you aren't comfortable working with Raisin, consider checking out other high-yield savings account options out there. We've got a video on those right here on this channel. To learn more about Raisin directly from them, scan this QR code or click the link in our video description. By clicking our links or using our code here, you're supporting our channel. Thank you so much for considering it. And thanks for hanging out today, everyone. This is Andy from The College Investor. We'll see you in the next video.